Welcome everyone, and thank you for joining today's Lion Energy Investor Briefing webinar. I'm Nicola Gazzatti from Investor Relations Consultancy Corporate Storytime. We're pleased to have the opportunity to run through the investment story for Lion Energy, and joining us today is Executive Chairman Tom Soulsby. This week, Lion Energy announced a joint development agreement with partners DGA Energy Solutions Australia, a wholly owned subsidiary of Mitsubishi Corporation, and Samsung Construction and Trading Corporation to advance the Port of Brisbane's green hydrogen hub. After Tom's presentation today, we will have a Q&A session. So without any further ado, I am pleased to hand over to Tom. Thank you, Tom.
Thanks very much, Nicola. And I appreciate everybody taking the effort today to listen to this development for Lion. I just wanted to start off by saying that we announced this deal Monday morning at the Hydrogen Connect conference in Brisbane. And we've had an amazing response from Queensland government and from industry to the announcement. And I think it's raised a lot of eyebrows as to the ability of Lion to attract these types of names into a business plan, which is pretty much what this is. So I just wanted to firstly say, my goal over the next few weeks is to start to for this deal to resonate with investors as much as it's resonated with industry and with government. So without any further ado, the best place to do that is to take you through the deal itself and talk a little bit about it. So that's the idea of today. What we've got on this presentation, and this is with the approval of these two entities, is we've got two logos here on the cover page. DGA is actually 100% subsidiary of Mitsubishi Corp, and DGA is actually the power arm of Mitsubishi Corp. It's based out of Hong Kong. We're dealing with their Australian subsidiary, DGA. It's not a very well-known entity in its own right. I've even noticed that people haven't even used the word DGA in a lot of the press that we've got for it because it's relatively unknown. But that is definitely Mitsubishi Corp as the partner, and they're building their portfolio in Australia. Interestingly, we were talking at length with Mitsubishi over about 4 or 5 months, and through their strategic relationship with Samsung, they liked our project to the extent where they've introduced Samsung into the project. So that's how we got to meet Samsung. The last thing I wanted to say strategically is when DGA told us how many hydrogen projects they'd reviewed in Australia, they told us that we were their #1 priority because we were the most likely to succeed, the most likely most likely to actually to come into fruition. Lion had deliberately right-sized this project to make it eminently executable and for us to start building a network on the east coast of Australia brick by brick. And they really liked this first brick, and that's why they're joining us. I just wanted to quickly just remind everybody of the corporate information. Lion is a small cap company. Our market cap is only around $12 million. We've got cash of 1.2 million, currently US dollars in the bank, and about 496 million shares on issue. We have a couple of strategic investors, very supportive investors, based out of Singapore, largely. And then we've got a free float of around about 65%. The other thing that you've got with Lion is a fair bit of board and management capital at risk with Lion, and we certainly participated in the recent convertible loan note that was issued back in August, and we did that for a very significant reason. So this joint venture discussion has been going on for 4 or 5 months, and there are certain areas. This is going to be a long-term relationship with the JV partners, and we felt the need to keep Lion's cash position adequate, so the Lion negotiating position wasn't compromised. As Samsung came into the picture, it took us an extra about 3 months to get this joint venture to a conclusion. So I just wanted to say that the recent convertible note issuance, it was our way of keeping the cash position of the company at a level so we weren't compromising our negotiating position. So we've ended up with a really good deal for Lion with this package, and I'll talk about that now. So in terms of our overall investment thesis, people that have been following Lion for a while will realise that we pivoted to green hydrogen in about 2021. And I can recall just the pivoting into green hydrogen moved our stock price from about 3 cents to 10 cents, which was just reflecting the over exuberance toward hydrogen at the time. We're in the best position we've ever been in terms of a real hydrogen strategy in 2024, and we're turning that vision into reality this year. And it's been somewhat disappointing that we've had a muted share price reaction to what I think is probably the best deal for hydrogen in 2024 in the country. We're a first mover in Southeast Queensland, certainly one of the first movers actually in Queensland, but certainly a first mover in Southeast Queensland. And I see the opportunity here for supplying this type of low-hanging fruit user case. Firstly, dispensing grey hydrogen for industrial use in Southeast Queensland, for supporting zero emissions for heavy mobility. One exciting area is fuel cell gensets. And we're working with Toyota and Blue Diamond on a strategy for basically them selling their EODEV fuel cell gensets into the industrial market in the Brisbane metro area. And the other exciting area, given where we are at the port, is logistics equipment, and particularly fuel cell forklifts. This is a significant area for us. Let's face it, we're only going to be producing at full capacity about 900 kilos per day here, 300 tons a year. And I'm very confident that we can get high utilization rates relatively quick out of this facility. The Port of Brisbane site and the scale of the site, which is 2 megawatt, is actually the first of its scale within an Australian capital city. So Lion has got a milestone here, which is really, commencing a new business model within Australia with hydrogen supply, largely to heavy mobility. And we're excited to say we're the first within a major capital city. The other project that's of a similar size is the Viva Energy project that's in Geelong. There is no equivalent in Melbourne as yet. The Port of Brisbane project has basically, our project financing and our ability to deliver on this project is now massively boosted with this DGA and Samsung JV, and I'll talk about that in a second. We've got advanced discussions with off-takers going on, and I always give shareholders a bit of a hint to what's going on in the quarterly reports. I particularly read between the lines when I say things like JV discussions are advancing to advancing. If I use language like that, you know that we're getting close. And I've also said in our latest quarterly report that we've got advanced discussions going with off-takers. We've actually already signed our first term sheet, and that with an off-taker, and I'm expecting that to get converted into a definitive gas contract with minimum take or pay imminently. I'm hoping that gets done by the end of September or shortly thereafter. Of course, we're not here to just talk about one project at the Port of Brisbane. This Port of Brisbane is a blueprint for what we think we can do in the in sort of other parts of Brisbane, Sydney, and Melbourne. And we're actually already investigating 2 sites to basically replicate this blueprint across the East Coast. And, again, we'll be following the zero emission aspirations of the New South Wales government, the Victorian government, and generally a move towards, interest in things like hydrogen as a zero emission fuel. Just moving on. So let's talk a little bit about the deal that we've done with the JV partners. First thing to say is, there's a lot of announcements going on in the market, people, announcing MOUs, etc. I decided not to do that from about 18 months ago. I decided to just, when we make an announcement, make an announcement about a binding undertaking that leads to real outcomes. And so I'm very glad to say that we've signed a definitive binding joint development agreement with these 2 groups. And so we'll be jointly developing our Port of Brisbane project with them. They're already got their participating interests as of now. Lion has got a participating interest of 50, and Lion and Samsung 25, and DGA's 25. So we've managed to retain the majority position in the project, and we're effectively going to be running this project on behalf of these two large entities. We're receiving $3.7 million in the month of September, and this basically is catch-up money for historical and pre-construction costs associated with the project. And it's upon agreement for commencing construction that DGA and Samsung will then become shareholders in Lion H2 Energy Proprietary Limited, which is the entity with the rights to the Port of Brisbane project. So they will be becoming shareholders in that project company at that time. The other part of the deal, which, unless I tell you, may not be obvious, is the procurement of debt funding of about 6.3 million. So effectively what we've done with this deal is we've basically got disproportionate funding from our partners of the remaining capital required to complete the project. And that's how they're paid their premium to come in onto the project. And so $6.3 million in debt funding. This will satisfy the remaining funding requirements for the construction of this project at Port of Brisbane. Here's a little bit more background on both the companies. DGA is a relatively new entity in Australia, very fast moving. They've been very impressive in terms of their business development drive. I think we can do more with them in terms of our East Coast strategy. And they are responsible, as I said earlier, for the renewable energy and green hydrogen sort of ammonia production investment and development in the Oceania regions. Samsung C&T, this particular project is small for them, but what they realise is that the large gigawatt scale renewable projects as well as hydrogen projects are going to take between 5 and 7 and 10 years to materialise. And for them, coming in on a project like ours where they know we can go into production within 6 to 8 months gets them hitting the ground running in terms of a hydrogen project. And that's exactly what they want to do. They want to hit the ground running, they want to be active, and they want to be learning by experience. And so that's the opportunity that our project brings to them. So just to be very clear, Samsung C&T are an EPC contractor in their primary business, but they're basically throwing their balance sheet at our project and taking a 25% interest. They will be a great partner for us in terms of helping us go from where we are now through to construction completion with their engineering prowess. Just to remind everybody of this site, this particular photo you can see at the bottom is a reflection of the development plan approval that we've got for this site. You can see the Ampol truck stop immediately adjacent to us. And then you can see the M4 highway bridge over there to the left over here. And but you can see that we've got tremendous amount of infrastructure that comes into this Port of Brisbane project. Two of the key sort of ingredients for making hydrogen are electricity, and we have already secured the couple of megawatts required for our project. That's often been an issue for other projects. We've already secured the town water to supply water into the project. And you can see here we've got two sets of electrolyzers. We've got storage and compressors, which are in this area and behind this wall. We've got on-site generation capacity of about 300 tonnes of green hydrogen per annum. And we've already actually received our tube trailers. We have 2 of these tube trailers, and we currently have just leased them to a third party. We're going to make an announcement on that very shortly at commercial rates until they're required for our project. Just to remind everybody, the proximity, the key sort of success drivers for a hydrogen project are, and the number one is access to market, proximity to market. That's really important. But of course, you need to have access to water. We've got that at the port. Access to great infrastructure. For example, heavy transport can just come in our site without any incremental investment because we're at the port already. And you need access to electricity. We've got adequate electricity, certainly for the phase one of our project. We really like the location for that reason. And just so everybody knows, we're pretty well secured, the only site available within the port precinct for hydrogen production. We pretty much have, by way of being first mover, a great solid position for being the supplier of choice in that area. And the port itself has about 5 million heavy vehicle movements going in and out of it every year. That's expected to grow to 14 million by 2040. So this is a 20-year commitment we're making to this site. We've got the ability to increase capacity on our site and just to adjacent to our site. And so we're excited to be in a great position for the growth that will come in hydrogen demand in the area. And just before I wrap up and take some questions, I just wanted to just remind everybody where we're at. Firstly, we have the development approval obtained. There's only about 2 projects in Queensland that have got a development approval on their site. The other one's the Arc Energy project in Townsville. We have a long-term lease. It's 10 plus 10, up to 20 years on one of Brisbane's best sites. The major equipment is already in Australia or under construction. We've got a very significant cost competitive advantage. I'm an oil and gas guy by background. I know that if we're going to be producing hydrogen in Australia, it's going to get commoditized. And so we need to be at the low end of the cost curve. We've worked really hard with our equipment suppliers to ensure they were at the low end of the cost curve. To give you a bit of an idea, our published capex for this site, for including equipment and construction, is around about 15 million Aussie dollars for the site. If you compare that to the ARENA sponsored Viva Energy project in Geelong, the budget for the Viva Energy Geelong was 44 million for a 2 megawatt hydrogen production and retail hub. They are exactly the same characteristics of our site. We're doing it for 15 million. They're doing it for 44 million. How are they going to be competitive on a sustainable basis? I don't know. One thing's for sure, Lion will be low on the cost curve and with the best positioning in terms of location and moving early. I think we're going to have a very strong business case moving forward. We've obviously got strong funding as a result of the JV. We're in advanced discussions with our first off-taker, and this creates a blueprint, and we're under investigation for another site. I think we'll secure our next site within the next 3 or 4 months. That's it from me. Nicola, back to you.
Thank you for the update, Tom. We'll now move on to our Q&A session. Your first question for today: your partners in the Port of Brisbane Green Hydrogen Hub project are huge international corporations. What do you think attracted them to this opportunity? And are these groups likely to be interested in partnering with Lion at a future date?
Look, I'll take I've sort of answered the first part of that question already, and I apologize for that. The critical thing for DGA and for Samsung is they thought that this is realistic. They know it's small, but they know that the hydrogen use case market is small, and they think it's right sized at just under a tonne a day of what's the potential is in the local market. So that's the rationale for it. I think if we're successful and we're smart and we can convince them to expand with us, the arrangements with Mitsubishi and Samsung are exclusive within 100 kilometres of the site. There's no handcuffs on anybody to do things together in other states, but we could, I'm sure, bring opportunities to their attention. And we're already making some noise about our second site location with the parties at the moment.
Thanks, Tom. Our next question. Do you think the regulatory approvals for other similar green hydrogen projects in Eastern Australia will be a challenge?
So it's interesting. The Queensland government have asked Lion and many industry participants for submissions around, the challenges of doing green hydrogen projects. I think it's not necessarily constrained by government approval processes. It's more constrained by local community responses to the presence of a hydrogen facility within electorates or within local council areas. And so we're being very mindful and I think other proponents of hydrogen need to be very mindful about where they select their location for their hydrogen hubs. And for example, we've chosen within an industrial site within the Port of Brisbane. That has been that's been a deliberate strategy to steer clear of urban areas and steer clear of those types of concerns from urban areas. I think it's a little bit like sort of diesel and refined gasoline product distribution. These things take time before people get comfortable about safety cases. People have, diesel, normally about 100 to 150,000 litres of diesel at a petrol station at any one time, parked in, put in tanks beneath service stations, very close to homes. People are comfortable with that because of a long-term safety experience with them. I think that's the type of thing we need to earn in the hydrogen sector. I just wanted to say in relation to hydrogen in the Port of Brisbane area, it's been produced for decades. Incitec Pivot's been producing hydrogen at their ammonia plant on Gibson Island for at least since the 1950s. And, the Ampol refinery has been producing hydrogen as part of the refinery process for decades. And so for this area of Brisbane, our small plant, relatively small plant, 1 tonne per day, is no big deal really for the state assessment agency to approve. And I think the expansion to other areas where they don't have hydrogen experience may be more challenging, but I think we'll get over that just by having a really good approach and a strong focus on safety, Nicola.
Thank you, Tom. Our next question, is there any timelines for offtake agreements and/or potential offtake volumes that you can share?
So not yet. I mean, I want to be certain before I certainly advise the market on getting an offtake. We do have a term sheet signed, which we're pretty confident will lead to an outcome. And I'm thinking that outcome should be quite soon. The presence of DGA and Mitsubishi on our sort of like ownership register is really making a big difference for people's confidence that this facility will actually come into fruition. That changed the whole conversation around people's confidence to invest in fuel cell electric trucks, fuel cell electric buses. And so my feeling is that we're going to build more and more momentum in the offtake space. I think you'll be seeing something coming out from us quite soon. We never know how long that takes. But for example, this joint venture agreement probably was 2 or 3 months longer than what I'd hope it would be. But one thing's for sure, if things are delayed, we're just making sure we get the best deal for Lion and Lion shareholders. That would be why.
That sounds great, Tom. Our next question, how many buses can Lion's Port of Brisbane facility supply based on production of 300 tonnes of green hydrogen per annum?
It's about 40 buses per day refueled back to back. And so, if you get some time, I highly recommend a bit of research on Lion's LinkedIn account. We spend a fair bit of time on sort of advocating for hydrogen fuel cell buses. And the hydrogen is a relatively inefficient way of storing energy versus batteries. But where hydrogen wins back is the speed of energy flow from container to container within vehicle, and the ability to run an electric motor on the back of a refuel. So a hydrogen bus can get refueled in about 7 minutes. It takes, under current conditions in southeast Queensland, about 7 hours to recharge a battery electric bus. And so when you're running Brisbane, for example, has a 24-hour day on the weekends KPI for the bus operators to provide bus services on the road. During the week, it's 22 hours per day. Taking buses off the road for recharging means you need more buses. And so there's two parts to the hydrogen value equation. Firstly, less space required on depot for refueling. Land costs are huge. To give you an idea, the Sherwood depot was bought back by the Brisbane City Council from private investors in 2021 for $132 million. That's an inner suburban depot. Land price is high and depot space is scarce. Anything you can do to minimize the need for consumption of depot space in things like refueling, i.e. replicating the current diesel refueling experience, is highly regarded. If you need more buses to meet the same KPIs, that consumes precious land space. The overall picture for zero emissions needs to be looked at as a whole, not just the cost of a battery electric bus versus a hydrogen electric bus.
Thanks, Tom. Our next question for you. Do you think the market is confused by Lion being a green energy company whilst also having commitments in conventional oil and gas? And how do you address this positioning?
Yeah, so we're obviously going to be looking afresh on the back of our of this success in the hydrogen side. We're going to look at our oil and gas business again. The one thing I would say is coming at this business from being an oil and gas company is a good thing, because we're well used to investing in for example, drilling for gas or oil without necessarily having a market. We're used to the discipline of running economic models before making decisions and offtake markets before making risk decisions. So the oil and gas, I suppose, legacy business provides us with that strong context in making decisions towards hydrogen. As for the long term of Lion being both in hydrogen and oil and gas, I think watch this space. I think as we get more and more successful in the hydrogen space, we may well consider a restructuring of the business. We're working through these types of ideas at the moment.
Thanks, Tom. And touching on the oil and gas, can we get an update on activities in Saram?
So we're in the process at the moment of running a farm out undertaking. We're working with Moyes, and we're engaging. We've got people in our data room going through the exploration opportunity that is in the East Saram PSC, and we have already paved the way for a farm out by way of getting our contract extension, which we announced back in June. So our farm out's been being worked since about February, but the challenge of not having sanctity of contract until we got the contract extension has proved somewhat challenging for people to make an investment decision prior to getting that extension. We've got the extension now, and so these discussions and VDR activities have picked up pace. So, so again, watch this space. I think we'll have hopefully something to announce within the next 6 months in that regard, and we're planning to try to drill a well in 2025.
Thank you, Tom. This is our final question for today. What do you think Lion Energy's green hydrogen supply business will look like in 5 years' time?
So I've made some statements last year, and I still stick to those statements. We would like to replicate this business to have about 20 facilities within the next 5 years. That is a combination of hubs, which is like at the Port of Brisbane, and on customer refueling propositions. So we'd love to have about 20 hubs and spokes within that time frame. The goal, because hydrogen production and hydrogen distribution is a challenging part of the business. We think it suits well to small cap companies. What I think Lion will have on its plate within 5 years is a hard to put together portfolio that will be like a 7-Eleven of the hydrogen space. We'll have production, we'll have distribution, we'll have customer offtakes. I think anybody that wants to leapfrog into this space will have to look seriously at Lion. That's how we create value for shareholders, is by efficiently putting this network together and being an attractive potential takeout candidate for the large companies that find it very difficult to do what we're doing. For example, Lion is the only refueling member of the Bus Industry Confederation. You know, we take the time and effort to attend their annual conferences, their gatherings, as a refueling proposition for them. These are hard things to do for the Fortescues, the BPs, you know, the big boys in the space. They would rather perhaps come in when the business has got more, has been aggregated into a larger space. This is the opportunity for Lion to fill that gap in the market.
Thank you, Tom, for addressing all your questions. Do you have any final comments you'd like to share with investors today?
Again, investors, you know, I apologise for not being able to prioritise you when we had our big hoo-ha in Brisbane earlier this week, which is why I wanted to put this webinar together today. We've had great response from Minister De Brenny, Minister McCallum. We had the Korean Ministry of Energy Director General there. We had the Director General for Hydrogen Queensland there. And we had Mitsubishi and Samsung candidates there. We've had a great response from industry and government. And now it's time to get the word out to shareholders. And I'm dedicated to doing that. And at any time in the next sort of 4 weeks to 8 weeks, getting out and talking to people. So that's the most important thing now. That's my clear message to you all.
We'd like to extend our thanks to Tom and the Lion Energy team for their detailed update. And if you do have any further questions for the Lion team, please forward them to info@corporatestorytime.com. Thank you all for joining us today. Thank you, Tom.
Thanks, Nicola.